Good morning and welcome to Morning Markets from the team at True Potential. Today we'll look at asset market performance from yesterday, but then also focus in on the inflation data from the US. Probably one of the most keenly awaited data prints that we've seen in a number of months, just given the backdrop that we've been discussing in sovereign bond markets. So if we look at equity market performance from yesterday, really a tale of little change in the UK and European markets over the course of the day. Different picture in the US, where we saw the S&P up about 0.3%, hitting an all-time high, supported by the technology sector. And they'll come on and explain why the technology sector was a little bit stronger yesterday. And it all ties back into those themes that we've been discussing over the past number of weeks. Inflation expectations, inflation, the impact that has on the bond market, and the impact that sovereign bond yields have on equity markets. So if we think about yesterday in the US then, and we look at what unfolded from an inflation perspective and a bond market perspective in the first instance, we saw a couple of announcements. One, the announcement from regulatory authorities that the J&J vaccine would be halted in its current rollout in the US, just given a number of adverse side effects that have been noted. Important to say, really, that it's 6 instances in the sense of 7 million doses administered. So very similar issues to that with the AstraZeneca vaccine. Not to say that it's going to be stopped, it's just going to be investigated, but we'll hear more of that over time. Important to note, however, that the US has sufficient supplies of vaccines from other manufacturers to continue with its rollout plans and those very aggressive rollout plans that they have. That caused the bond market to come in a little bit initially, and then we had the inflation print, as I said, very keenly awaited what was going to come here. I think an expectation maybe building that we had a consensus number which was going to deliver inflation increasing about 2.6% year on year. Came in pretty much in line with that number, so no upside surprise, if you will, to inflation. And that caused the bond market to come in a little bit further. And then also during the course of the day, we had a very successful 30-year Treasury auction with no issues. Builds on the theme that George touched on yesterday of the previous day, where we saw 2 good auctions as well. So demand for US Treasuries at these yield levels was very evident. And that caused the bond market to come in, and it caused it to come in across the curve around about 5 basis points over the course of the day. So bond market coming in, taking us back to how did that play out into the equity market. Very supportive for those growth equities. Not surprising then that we saw the NASDAQ and technology leading the way yesterday with that as a backdrop. I just wanted to drop into that inflation discussion in a little bit more detail and just share these 2 charts. So the first chart that we can now see just looks at what we have seen in terms of the fall off inflation last year. So you can see that steep drop, and then the subsequent increase that we've seen in inflation. Important to say that that's wholly understandable in terms of the backdrop, because we do have a very weak base effect. Thinking back to this time last year, oil price was falling quite significantly. This time we've got the oil price rising. So that in and of itself, within a base effect, does cause a bit of the increase that we're seeing. I think then if we try and strip out some of those more volatile aspects and we look at the next chart, and this next chart just looks at core in inflation ex food and ex energy. And what can we see here? Well, we can see the increase. Yes, it's evident, but it's not to the same extent. So inflation on a core basis up 1.6% year on year. And you can see that in the context of the longer term core inflation rate in the US. I think the chart goes back to 2012. And you can see there we're probably talking about a core inflation rate probably on average of 2%. Interestingly, in line with the Fed's target. But that's where we're needing to get ourselves back to. So you can see there a little bit of room still to go in that regard. So that's something that we'll continue to watch, the market will continue to watch. But thinking about the shape of the chart, we can see that as we look forward to inflation readings in April and May, they also will have that base effect working its way through. So it won't be surprising to see inflation continuing to increase over the next couple of months, or the numerical value continuing to increase. What then becomes the question for market participants, for central bankers, is that sustaining, or is it just a transitory effect? And that will become more evident as we transition through this year. I think the other thing, just on an inflation theme this morning to discuss, was just the change at the Bank of England yesterday. We see Andy Haldean, the bank's chief economist, leaving to take up a new role. That's interesting because of his hawkish stance that he's taken towards inflation, the discussion around negative interest rates, etc., and a more positive outlook on the economic growth recovery for the UK. So be interesting just to observe in coming months how that changes any of the narrative from the MPC. I'll leave it there, but please do subscribe on our YouTube channel. It'll allow you to get morning markets straight into your YouTube feed, but also all of the great content that True Potential is producing. Many thanks, and I look forward to seeing you again tomorrow.
Subscribing to True Potential YouTube channel is quick and easy. Simply go to your YouTube app on your phone, type in True Potential and press the red subscribe option. You'll then be notified as and when new videos are released.